Hello guys and gals, I'm Nate from 99 Bitcoins and welcome to Bitcoin Whiteboard Tuesday. Every few weeks we're going to send you a cool new video, just like this one, explaining some basic concepts around Bitcoin. This way you can learn about Bitcoin yourself or forward these videos to friends or family members who have questions. Today's topic is altcoins and ICOs. In this episode, we're going to go over some of the different cryptocurrencies out there and explain what are ICOs. So let's get started. Altcoins, or alts for short, are cryptocurrencies that are not Bitcoin. The word altcoin is an abbreviation for alternative coins. So Litecoin, Ripple, Dash, or any other non-Bitcoin cryptocurrency all fall under the category of altcoins. Now you may ask yourself, why do we even need altcoins in the first place? Well, the answer is simple. Bitcoin is not perfect. Usually, altcoins will try to create a better or different version of Bitcoin. For example, Litecoin is an alt that confirms transactions faster than Bitcoin. Dash and Monero are altcoins that focus on the anonymity aspect, making transactions virtually impossible to trace. Each altcoin has its own unique thing it does best. Altcoins can also vary from Bitcoin in the way they are mined. For example, Bitcoin's mining algorithm is called SHA-256, while Litecoin's mining algorithm is called Scrypt. Different mining algorithms require different types of hardware to mine. Another thing to keep in mind is that if an altcoin is relatively new or not that well known, it will probably be harder to buy and will have fewer wallets that support it. Until today, thousands of altcoins have been introduced to the market, but only a handful have managed to gain a significant following like Bitcoin has. One way to figure out which altcoins are gaining popularity is by measuring their market cap. Market cap, cap being short for capitalization, means how much money, or capital, is invested in an asset when measured in dollars. It's calculated by taking the number of coins in circulation and multiplying it by the dollar exchange rate. If, for example, there are 16 million Bitcoins in circulation and the price of one Bitcoin is $2,500, then the market cap for Bitcoin would be $40 billion. For a long time, Bitcoin's market cap accounted for 90% of the total cryptocurrency market cap. Today, though, as more altcoins are gaining attention and appreciating in price, Bitcoin's share of the market cap makes up less of the total cryptocurrency market cap, which has managed to surpass $100 billion in 2017. So how do you actually decide in which altcoin to invest? First and foremost, I suggest you read about the altcoin you're interested in. Make sure you understand what makes it unique and see if it makes sense to you. Most importantly, don't invest in a coin just because of the buzz surrounding it. Many coins out there employ what is known as a pump and dump scheme. Well, this means that the coin's creators generate a lot of hype about a specific coin in order to get people to invest in it and inflate the coin's price. Once the coin appreciates in value, the creators sell all of their coins at a profit while crashing the price due to the massive sell-off. This leaves the majority of investors with a bunch of useless coins and no one to sell them to. Other stuff you should look into include the coin's market cap. This will give you an idea of how well this altcoin has been received in the community. I would also suggest getting involved in the coin's community. Usually, most major coins have an official forum, a Facebook group, a subreddit, and other places of gathering where you can ask the developers of the coin specific questions. A strong community is an important predictor for a coin's success. Now you know what altcoins are, and we can move on to our next topic, which is closely related: ICOs. So, what is an ICO? ICO stands for Initial Coin Offering. The term derives itself from the traditional finance term IPO, or Initial Public Offering. An IPO is used to describe the launch of a new company on a stock exchange, also known as going public. The purpose of an IPO is to sell stock in a company in order to raise capital from the public. ICOs, on the other hand, sell coins, also known as tokens, as a way to fund a specific project. The general idea is that if you believe the project will succeed, you buy the tokens that power the project beforehand at a discount. And then you will be able to sell them later on at a profit once their project succeeds. Let's break this process down a little bit further. When a cryptocurrency company wants to launch a new project through an ICO, it creates a white paper. The white paper is a document that states what the project is about, what needs the project will fulfill, how much money is needed for the project, and how long the ICO for this project will run for. After the ICO is set up, the public can start investing in the ICO by sending money to the project and receiving project tokens or coins in return. If the money raised by the ICO does not meet the minimum funds required by the white paper, the money is returned to the backers and the ICO is deemed to be unsuccessful. If the funds requirements are met within the specified time frame, the founding team will now get to work and bring the project to life through the use of the funds raised. To sum it up, ICOs are like Kickstarter for crypto projects. The best example of a highly lucrative ICO was the pre-sale of Ethereum tokens. In mid-2014, one Ether token, also known as ETH, sold for around 40 US cents. If you bought $100 worth of ETH back then, you would have the equivalent of $75,000 in 2017. Today, more and more projects are trying to mimic the success of Ethereum's ICO. ICOs are conducted over the Ethereum platform, and that's why you'll need to buy the Ethereum token, known as Ether, in order to participate in them. The recent high volume of ICOs caused Ethereum's price to spike and also overwhelmed the Ethereum network. Well, this caused delayed or failed transactions, leading to the suspension of Ethereum trading on several exchanges and problems with ICO funding. The worst example of a disastrous ICO is the DAO. The DAO, or Decentralized Autonomous Organization project, managed to raise $150 million worth of Ethereum. However, shortly after the ICO ended, a hacker managed to drain a third of the amount raised due to a bug in Ethereum's code. This crisis and the different opinions on how to handle it led to a split in the Ethereum network and the creation of both Ethereum and Ethereum Classic altcoins. Just like with any other financial instrument, where there is the possibility for great reward, there is great risk as well, and ICOs contain a huge amount of risk. ICOs can be considered as high-risk gambles on cryptocurrency startup companies. Many people today invest in ICOs not because they believe in the project, but because they just want to make a quick profit. This in turn creates a general hype before the project launches. But as the buzz fades away, project creators and early investors want to take the money off the table. So they start selling massive amounts of the token, and this can cause the price to sharply drop. Another thing to consider is that the bar for creating an ICO today is pretty low. While conducting an IPO requires to comply with a lot of regulation, ICOs skip this entire burdensome procedure by raising money exclusively in the cryptocurrency, which has yet to be regulated. Want to create an ICO? Just create a shiny new website outlining your concept, create a digital asset, get some crypto celebs to say nice things about it, and sell your project's assets directly to people around the web. You don't even have to have a working product. These low barriers to entry bring about a massive amount of low-quality projects that will never see the light of day. This could be due to the fact that the founders lack the skills required to execute the project, or that the ICO is just a plain scam to begin with. As you can imagine, this is a scammer's dream come true. With minimal investment of time and money, they can get tons of people to send them money without any legal exposure or liability to the public. In order to emphasize the absurdity of how much dumb money is spent on ICOs, one developer went so far as to create a site called Useless Ethereum Token. The website states, you're literally giving your money to someone on the internet and getting completely useless tokens in return. There are no white papers, no products, and no experts. It's just you, me, and your hard-earned Ether and my shopping list. Amazingly enough, even the Useless Ethereum Token project managed to raise over $60,000 US. In some cases, you may lose money in an ICO not due to an intended scam, but due to a hacker manipulation. For example, not long ago, a hacker managed to hack an ICO website and changed the Ethereum ICO deposit address to his own Ethereum address. This caused over $7 million to be sent to him. Of course, that money is now lost forever. To sum it up, ICOs should be considered as risky as gambling. Due to the irreversible and unregulated nature of cryptocurrency, you have virtually no recourse if an ICO turns out to be a complete scam or goes bust. So how do you know if you should invest in an ICO? Well, first of all, you need to know what you're investing in. This means you should take the time to actually read the ICO's white paper, research the project and founders, and get involved with the community around it. Also, make sure you understand how the tokens for the project will be distributed. ICOs, which hold a lion's share of tokens for the founders, may end up selling these tokens in order to make a quick profit after the ICO ends. Another important question to ask is how much money is being raised and for what purpose. If there's no cap on the amount being raised, the project may get overfunded. Getting more money than you need can also hinder project development, as laziness and no clear focus may arise as a result. Some projects have managed to raise tens of millions of dollars before the first line of code was even written. Most importantly, don't ever invest in something you don't understand. To sum it up, ICOs are a new form of crowdfunding which very few people understand. If you're just getting started with cryptocurrencies and ICOs, you probably should do a fair amount of additional research before committing your money to any project, as exciting as it may sound. That sums it up for today. I hope you've enjoyed this lesson of Bitcoin Whiteboard Tuesday, and I'll see you in a bit.